Ladies and gentlemen, welcome to the market close slash Visa listen along earnings stream. Let me turn my volume up just a little bit here. But aside from that, what an unbelievable day that this truly was. What we ended up getting to see was SoFi potentially closing. I said that this day was going to close at 31.51. Let's see if we close even above that. I don't want to say, just to get my target right, that the stock actually sells off. I mean, let's keep it going more and more positive. On top of that, we end up seeing Nvidia, ladies and gentlemen, Nvidia at $201 a share. Okay. This is by far the largest position in my portfolio. Over 40% of my money is sitting on NVIDIA. And we are seeing a 5% day across NVIDIA, SoFi, and actually my second biggest position in my portfolio also hitting new all-time highs today. Shopify, 179.34. I couldn't have asked, literally, I could not have asked for a better day. Now, let's hope that this continues to push forward. Not selling a thing. Okay? Not selling a thing. Rate cuts come tomorrow. Is some of that being priced ahead of time? Maybe. But it's not going to drag down the stocks. I mean, maybe it's a buy the rumor, sell the news type event, but I don't think it is, because it's a real fundamental catalyst for names like SoFi and NVIDIA and Shopify and all of these names that require just slightly cheaper cost to borrow. So if you guys have been here along the journey, congratulations on SoFi. Yes, whenever market opened today, we ended up seeing it drop all the way 3% down on the day, a red day, going from up 4% to down 3% to potentially closing above 5%. At least the market actually has, some real head on, or a real head on its shoulders. Am I dumb for wanting to sell some SoFi covered calls? No, I wouldn't say that's dumb. I don't know what your strike price is or the date that you're picking, but usually this is not always the case. Usually you're okay to sell covered calls whenever markets are at all-time highs and the company that you're selling it on is also at all-time highs. That doesn't mean that SoFi can't explode past your strike price, especially if you go out far enough, maybe, or try to collect too much premium, that the chance that it might blow past your strike price is, that's very plausible. $37 in 24 days. I mean, that might be okay. Like $37 on SoFi, pretty freaking awesome price. Even if you do have to sell it, I mean, that's still a killing. And the likelihood that you could roll out, probably also high. Maybe wait for tomorrow, with rate cuts and everything. But then again, that's probably priced into the premiums of the covered call, is some expectation that it will have a pop. But yeah. The market gives you opportunities, and this morning was a good one for SoFi. Sorry, I have nothing on my screen. There we go. Okay. Let's see. Looks like we're going into the close. 1 minute left. 31.65 right now on SoFi. NVIDIA, $201. Bloom Energy, by the way, we're going to cover this. Their earnings are in after hours. EA, Aurora, Visa, Booking Holdings, Enphase, Cheesecake, Mondelez, all of these businesses are looking at earnings tonight in essentially a few minutes. So we're going to be covering all of those. I got to be honest, I am not an expert in any single one of these businesses. I'm here to learn, okay? If you guys are here to learn from me, you're not going to get too much. But if we want to learn together, we're going to read through some of these earnings. Listen to the Visa earnings call. It's amazing in the payment space. There's going to be a lot of commentary around stable coins and these sort of effects. So it's important that we read through that. But as the market closes, and this is another day, October 28th, that we have survived and SoFi hits new highs, almost hitting $32. We didn't actually see that today. We didn't see 32, but it came dang close. And my prediction of where SoFi would close was 31.51. I was 15 cents off. We'll get them next time. Still up 5.5%, and NVIDIA closing just under a 5% day, 201.03. I'll never complain about that. We finally hit the 200s. The stock at one point, 400. Nope, I'm getting all my numbers mixed up. $4.9 trillion market cap. There we go. Geez, I couldn't speak there for a second. I find a lot of times I can't speak. But yet you guys put up with it anyway. So we ended up seeing NVIDIA GTC. That's why a lot of this pump is happening. They ended up showing off some pretty incredible, results. I'm just going to talk about this just real quick. And then once we start seeing earnings come through, we'll immediately switch over, okay? Booking Holdings immediately, by the way, we might already be into this. Booking Holdings up 3.3%, now 2.5%. Enphase up 1.2%. Cheesecake up 2.6%. A lot of runs immediately as the market closes. So nothing quite selling down just yet. Okay. Everything looks to be doing okay. But let's try to find some earnings and get updated here on what the results are. I'm not getting anything just yet, but I'll let you guys know. Booking Holdings, okay, double beat. Earnings per share beat by 4% and revenue beat by 3%. EPS is up 19% year over year. Revenue is up 13% year over year. EPS actually, surprisingly, quarter over quarter, 80% change. Wow, on Booking Holdings. We'll get some more details on that here in a second. But let's try to get the next earnings in. So Booking Holdings up 2.6% on that double beat. Quite interesting. Yeah, Cheesecake Factory, the restaurant. Yes. Okay, Booking Holdings up 2.7%. No, are we pushing new highs? Not all-time highs, but highs of the day. Cheesecake up 1.5%. Enphase up 1% now. Not a ton of volume on Enphase, but still, we will see. Okay, let's see if we have any more numbers out. Only Booking Holdings so far. That's the only one I'm seeing. Which now they're up 4.3%. Okay. Bloom Energy is up 1.5%. On a day that was up 4.3%. But we're talking about after hours now. We're talking about just the movement, not the day. The day was up 4.3%. The after hours is up 1%. You can see that right here. 1.5%. If you're on Robinhood, it doesn't separate it. The day versus the after hours. Okay. That said, though, guys, really quick on SoFi, I'm very happy that we ended up seeing a recovery. It was the best quarter we've ever seen, and sometimes people are too focused on the stock to realize that that's what we're seeing. They think that institutions or something is picking through the data and they see stuff that retail is not picking up on. That just wasn't the case this quarter. Just algos were selling the name and, maybe some people are taking profits, but that wasn't going to be the end result. And it won't be the end result over the next 3 months. I mean, obviously, new macro environments could, come about, new black swans that we end up seeing, more problems that we can't foresee right now. But if you're betting on the quality of this name, their ability to take deposits from large banks and grow the amount of originations that they have each and every quarter, we saw more of the same this quarter. Them just continuously doing that, and the loan platform business saw an increased level of growth. I mean, just insanity. $3.4 billion or something. I'm going to have a lot of videos, I'm going to have a couple videos talking about the different aspects of SoFi, but probably the one that everyone needs to pay attention to is the loan platform business one. That's going to be the make or break of SoFi's business now. They have a completely new business model. It's essentially the one of adopting what Upstart does, where they originate loans for other people, and then that determines, how fast they can grow. Bloom Energy up nearly 2% on the day. Mondelez down 2.2%, now down only 1.5%. Cheesecake Factory up 1.4%. Enphase being up 1% to being down 9%. Ooh, I'd love to see what's going on there. This is why Enphase, okay, weirdly enough, EPS beat by 36%, revenue beat by 11%. Something else in this quarter just happened. Let's go. I'm going to go directly to their investor relations page to find out, because that's a double beat, ladies and gentlemen. Let's see. Doesn't look like I have their results just yet. We do not have the Enphase results, but there must be something on the Bloomberg terminals to suggest that there's a sell-off. Maybe, yeah, no, they're not reverse splitting at $30+ dollars. I don't know what it would be. I honestly don't know what it would be. Okay, Booking Holdings, however, up 4.77%. Gross bookings grew 14% compared to the third quarter. Revenue grew 13% year over year on a constant current, or 8% on a constant currency basis. Given the stronger than expected early results of the transformation program, we are raising our expectations for the ultimate annual run rate savings to a range of $500 to $550 million from our previous guidance of $400 to $450 million. Ooh, little program that's helping their cost savings here. We're pleased to report a strong third quarter with 8% room night growth and double-digit gains in gross bookings and revenue. Highlighting the strengths of our platform, the discipline of our execution, and the momentum we're building for the future, said the CEO, Glenn Fogel. Through the connected trip, where more customers are choosing to book multiple trip elements with us, deeper engagement through our Genius loyalty program, and our innovations in Gen AI, we are building offerings that enhance our value proposition for both customers and suppliers. Stock up 4.7%. Okay, EA ended up reporting. Where is EA here? Sort of flat on the day, 0.3%. EPS beat by 54%. Revenue missed by 3%. Stock is absolutely flat. Aurora up 0.7%. Visa down 0.8%. I don't have Visa's numbers. Bloom Energy. You guys like Bloom Energy? Where's Bloom? Up 3.5%. EPS beat by 50%. Revenue beat by 21%. That's a huge beat. EPS is up 1,600% year over year. Revenue's up 57% year over year with a 21% beat. That's a huge beat. I wonder what the whisper number was, because maybe there were some signs that it was actually going to beat, and there was a high chance that they were going to beat. Stock's now up 5%, so maybe just a little delayed. $26 billion market cap. A lot of people have been telling me to get into Bloom Energy. Okay, let's get these. Seagate. I don't have Seagate in this list. I don't know why I don't. Up 1%, double beat. Let's see what else. Mondelez, double beat as well. Barely. Flat, essentially. EPS up 3%, revenue beat by 1%. Still, stock is down 2.7%. We'll get some more details on that name here in a second. But yeah, Bloom Energy by far putting up the most stunning earnings. Enphase as well, but there must be something that is stopping the stock from going up. I have their financial results here now. It's finally updated. So let's see what is in here. Okay, free cash flow of 5.9 million, ending cash and cash equivalents of $1.5 billion. GAAP diluted EPS of 50 cents. Non-GAAP diluted EPS of 90 cents. Maybe the margin is decreasing or something, but I only see what they put up, 49.2%. We'll have to take a look on Fiscal AI to see how that's changed over time. But I don't see anything that would drive the business down just yet. Total revenue. Our revenue in the United States for the third quarter increased approximately 29% compared to the second quarter. The increase in revenue was a result of the high demand and safe harbor revenue. Our revenue in Europe decreased approximately 38% for the third quarter compared to the second quarter. The decline was the result of further softening in European demand. Could be that. We'll see. Let's try to get Visa news here. Visa flatline. EPS 298, expectation 297, under 1% beat. Revenue beat by 1%. They got 10.72 billion. They're expecting 10.6 billion. So EPS grew by 10%, revenue grew by 12%. Exactly what people expected, essentially. Okay. Let's see. Okay, more on Booking Holdings. Let's see what we can find here, being what looks like to be the big winner of the day. Up 4.5%, Seagate up 4%. And where is Enphase, Bloom Energy? Bloom Energy roughly flat, even though they put up such stellar earnings. Okay, let's see what else from Enphase here, down roughly 2% on the day. Revenue was a beat. EPS was a beat. Yeah, everything that we said. We delivered 410 million in revenue, shipping 1.77 million microinverters, and recorded a record 195 megawatts or megawatt per hours of their IQ batteries in Q3. I think it's the European sales being down 38% quarter over quarter on just bad demand. That must be what it's selling off on. I can't imagine it's much else than that. Seagate pushing higher. Visa did announce. We talked about Visa. They we have their numbers. Their actual call is at 5. So we'll be listening from 5 to 6. They essentially were flat. And so the stock is sort of representing that very flat day. They are essentially beats, both of them, but not even 1% moves. Okay, so it's all right. Yeah. Thoughts on Enphase? I had a lot more thoughts on Enphase back whenever, the government was supporting solar purchases to some degree. Once a lot of those incentives for EVs and solar or solar panels and all those ended up slowing down, and Trump took away a lot of that. We saw what happened. Look at Enphase stock. I'm looking at Visa. I was like, what kind of chart is this? Enphase, after 2022, ended up getting beat up, and then 2024, even worse, just getting killed, and then just constantly getting killed. So what a chart this is. Being an absolute Wall Street darling to being something that people avoid like the plague. Didn't they also get kicked out of the S&P 500? They got put into like the S&P 600 or something? I'm still, what happened to PayPal? Oh my gosh, B-Dubs was right. Okay, so at the beginning of the day, I did a live stream doing SoFi earnings. Okay, So if we look at SoFi earnings, this is where they showed off earnings, was 7 o'clock. And you could see it skyrocketed down. And then whenever the day opened, it started falling, everything like this. And PayPal went from being a $70 stock up to $82.59. Okay. And then B-Dubs, which is a viewer in chat, said, I have a sneaky suspicion that SoFi will close above PayPal. Because boy, oh boy, does this name or PayPal, deserve the name PayPal. They literally went up less than 4%, and SoFi closed over 5.5%. That's insane. Why is Visa falling? It's going up. But yeah, it was at 338. Wow, Visa's really pushing right now. 1.4%. Let's see what news I can find here. Okay. Visa. Okay. Revenue, extremely slight beat. EPS beat by 1 cent from 297 to 298. Processed transactions was up 10% year over year. 67.7 billion processed transactions this quarter. Cross-border volume was up 12%. Payments volume was up 9% on a constant currency basis. Cross-border volume, excluding intra-Europe volume, was up 12% year over year, or 11% on a constant currency basis. Okay, let's see here. Their dividend ended up getting increased 14% to 67 cents a share, and they also had about a $900 million litigation provision related to an interchange multi-district case. Yeah, that's going to happen to some of these payment names. They're just going to get hit with these fines constantly. Okay. Really quick on Seagate. Good quarter, good guidance. Dividend ended up getting raised. This is Seagate here, up 4.5%. CEO commentary said revenue grew 21% year over year with non-GAAP EPS above the high end of guidance. And we're ramping aerial density leading Mosaic Hammer products to meet robust cloud demand and AI-driven use cases. Love it. Okay, let's go ahead and take a look at Visa's earnings presentation. Booking Holdings now up 5.2%. Visa up 1%. Cheesecake flat on the day. Mondelez down nearly 4%. Bloom Energy up nearly 6%. Maybe making itself known here. Push 7%. Traders are having fun with Bloom Energy right now. Okay. Let's get back to Visa's fiscal Q4, but it's actually, for everyone else, it's Q3. It's their fiscal Q4. Okay. Don't even say SoFi's dumping. It's down 0.5%. Chill. Okay. We're up 5.5% on the day. But Bloom Energy is up nearly 8%. 8.5%. 122.84. Okay, Visa results. Fiscal fourth quarter growth in payment volume, cross-border volume, and processed transactions remains strong. Share repurchases and dividends of $6.1 billion for fiscal fourth quarter. And the board of directors increased their quarterly cash dividend by 14% or 67 cents per share. Net income. Yeah, we talked about all the numbers. Business drivers, we talked about that as well. 2025 US payment volume. Is that growth rate from year over year statistics? All figures show a constant currency basis and growth rates are calculated over the comparable period or prior year period. Yeah. So these are year over year growth rates, which that's kind of interesting, eh? They show off their 3 months and then as far as they can on October as well. Isn't that interesting? Process transaction growth also still growing nearly, 9% through October as well. It's declining ever so slightly, but they're already so big. You kind of have to factor a little bit of that in. Total payments growth. This is from Q3, fiscal Q3. So this is last quarter in blue, new quarter in yellow. Credit payment growth. Wow. Increasing, debit flat. Yeah, credit, man. Jeez. Okay. Payment volume growth, US and international. US, international, and then total for all of Visa. Look at the levels of growth that Visa's putting up in international markets still. Even just in the US. Like, it's just crazy. They are really a compounder. Up 1%, by the way. Cross-border transaction counts in millions. Holy crap. Wow. Okay. Total cards, credit cards increased 9% year over year. Wow. That goes to affect all the banks, the fintechs, SoFi, all of these names. Isn't that crazy? Debits up 5%, credits up 9%. Wow. They have a lot of credit card or debit cards outstanding. It's actually so many. Okay. No, we don't need that. Service revenue, data processing revenue, international transaction revenue, other and client incentives as a negative. Oh man, I'm really excited to hear this quarter. I need to learn more about Visa. It's not a name that I cover enough, but for how much I'm in the fintech space, I keep an eye on their top and bottom line, but I don't get into the granular details of Visa. That's going to change this quarter. Just a cash flow machine. Net cash provided by operating activities. Full year of 2025, now $23 billion. $23 billion, almost no capex on that. So $21.5 billion of free cash flow on Visa. Up 1%. Bloom Energy up 4%. It was up 8% not long ago. Holy. Didn't know Visa had such higher margins. Well, that's why everyone wants to litigate them and pick that business apart, is because they have amazing margins. Let's see what of these names Fiscal AI has the numbers for. Because then maybe we can go through and take a look at Visa and see how they've actually done, not just this quarter, but over time. Okay. Come on. Yep, we have it. Okay. Cool. All right. Let me drop this. This is Fiscal AI. So we can see Visa's revenue over time. I'm just going to bring this a lot closer because we don't need that much data. Go to here. 3 years of data. And then year over year growth. Look at that. 11.5% still. Okay. We probably have service. I'm not going to look at client incentives because I don't like maybe we'll look at it in a second, but That's how their revenue breaks down for the most part. Service revenue. Actually, data processing revenue is by far their biggest at a 12% CAGR as well. Not as fast as other services, which I do know that they've been getting into a bunch of other value-added services. I know they're competing with Galileo and a couple of other business lines, but it is newer for them. How does it break out between U.S. and international revenue? U.S. revenue. Wow. I mean, yeah, one country makes up a significant percentage of their overall earnings. Stock up 1.2% roughly. Total payment volume hit another record high this quarter. Oh, wait, sorry. We don't have... oh, sorry. This is June numbers for the segment data. But on the income data, we have September. Okay. Gross profit margin. Gross profit margin. Oh, sorry. Gross profit margin is at 81.5%, the highest margin that they've seen in the last 3 years. Tell me that's not exciting. Visa and MasterCard are my big boys, says Shirley. Shirley, I need to learn from you. Honestly, though, it's not hard to look at these charts and say, hey, these are the big winners. I just always get worried about, like them getting some sort of regulation that does not allow them to compete as well as other payment names. And then like each and every quarter, I'd be so worried that like, I don't know, Elizabeth Warren is going to come after them or something like this. But yeah, operating margins of 57%. Let's continue down the line. I want to see free cash flow margin. See what that looks like. Free cash flow margin of, what is that? My camera's in the way. 54.54%. Free cash flow margin, 54%. And this is not a flash in the pan quarter. This is a lot of quarter. I mean, you imagine September 2023, 76, 77% free cash flow margin. With Trump, they write the regulations now, so we're good for the next 2 years. All right, that's fair. Didn't Trump try cracking down on NSF fees and overdraft fees and a bunch of these fees that were on cards as well? Didn't he just try doing that? Like as he was coming into office? Wow. Diluted EPS for this quarter, $2.62. This is a compounder. Then you got to put into perspective their multiple as well. Obviously, they have a very, very good business, but they are expensive as well. Nearly 34 times PE, price to book 17 times. Not going to matter for Visa, so scratch that off. But Fiscal AI is actually goated. I know, that's why I work with them. I would never work with like a bad company or something like this. I don't care enough. So if there's like some, revolutionary product, then I'm going to invest. Or sorry, I'm going to show you guys that. But I am going to try to invest in Fiscal AI as well. I want a private equity stake in the business. I don't currently have one, but I'm just seeing the way that they're winning. And I'm like, man, this is going to be a huge product. Like I use it every single day. And I find whenever a company captures you like that, you should, pay attention. And if you have the ability to invest in a private business, then pay attention to that as well. Okay. Trump removed all that? No, I'm pretty sure it was Trump because I remember I remember talking about it. Yeah. No, Trump was talking about the not overdraft fees. What was the fee that he was trying to essentially cut in half or limit to $8, where some of these credit card hidden fees could be much higher than that. Oh man, I'm blanking. You guys were right. I did not get a lot of sleep before SoFi earnings last night. And rightfully so. It was a stressful one watching the stock go down whenever the market opened, but we did all right. By the way, like hundreds of thousands of dollars got stolen on a fake live stream covering Jensen Huang. Did you guys see this? Yeah, it was just crazy. There was a fake live stream, and because the NVIDIA GTC was late, 120,000 people went to go watch that stream and ended up going to the one that was on time. The actual live stream was late. His version of that live stream, Jensen's, was not able to sort of bring people over to their stream. So they ended up scanning QR codes and sending in crypto. And Jensen was promising to double your crypto as a thank you for NVIDIA being the most popular company. Obviously, it was a scam. Dude nailed SoFi 3150. No, I mean, we got a little higher than that. So I'm happy it's sitting at 3150 right now, but 3166 right now. 15 cents off. Dude, hundreds of thousands of dollars. Hundreds of thousands. Just crazy. Investing for freedom. What is up, brother? The Trump administration limited the $8 credit card late fee limit. Moved to scrap a rule that had capped most credit cards. The reversal allowed banks to charge higher fees, potentially restoring them to a maximum of 4. Oh, so he reversed it. Oh, I don't remember that. I thought he was cracking down on it. Okay. Yeah, I'm looking at the balances right now. It does look like they've been pulling some money out. There's $50,000 in the Solana one and $126,000 in the ETH wallet that was stealing money from the fake Jensen report. Crazy. Let's get back to the stock performances. You could be right, Daro. I don't know. I don't know. What flipped SoFi back to green? I don't know. I think it was just algos, and then people were, reading the call and just being like, "Oh, you know what? This is actually crazy. This is a really good call." Yeah, tomorrow we might have rate cuts. We could even see higher pricing. Maybe actually break through 32. That would be very nice. But yeah. Visa up 0.5% right now. We're going to listen to the call here in the next, 25 minutes or so. Aurora flat. EA is flat. Seagate is up 3.7%. Mondelez down nearly 4%. Cheesecake up 1%. Enphase down 4.9%. Booking Holdings up 4.7%. That seems to be the big winner. That and Bloom Energy. Holy. But my day consisted of SoFi, NVIDIA, and Shopify. My 3 biggest holdings all just pushing today. How exciting. Sorry, I don't have the chat on screen. I should have kept that on. Yeah, SoFi is a crazy. Sorry about the squeaky chair. SoFi is a crazy stock to hold. Some names are. You know, Visa, not one of them. Very stable business, just seemingly over time goes in one direction. But for the risks that you take, sometimes you can be rewarded. And if I'm right, SoFi is one of those names, and they'll push higher. Yeah, and I don't know about you guys, but the way my phone works is whenever I scan a QR code, it shows me the link that it's sending me to. It doesn't immediately send me to it. So I can read if it's a link that I trust or not, or if it's just some random sketchy site, then I won't click through. You know? Yeah. How much do you think Visa is going to go up tomorrow? I've got zero idea. I don't base my investments off that. I'm purely a fundamental investor. So I'm here to listen to their earnings call to understand whether or not, I have something to learn about stable coins, their other value-added services. I want to hear about some of these things. Yeah, NVIDIA, 5% day for a company that's $4.9 trillion of market cap is insane. It's just insane. I'm thinking PayPal, Adobe, and Salesforce. You love, I could probably find you companies and then know that you like them. You're buying like these return to growth companies that are beginning to see value stock valuations. Like one last hurrah type names. Now, I'm not saying that Adobe, Salesforce, or PayPal are dying in any degree. I think all those companies will be stronger, the year after now going forward. It's just funny how all of those fall into the same sort of bucket. So I've got you pegged. Well, what is your exit strategy with SoFi? I never heard you speaking about future market cap that the company is going towards. What does that mean? I think that as long as they can continue to execute, there's not a market cap that I'm planning on selling at. I'll sell whenever I think that the strategy that SoFi is going towards, or the growth rate, or the ambition that they have starts to lower. And to some degree, I think Anthony Noto talked about it. He said, hey, whenever our growth rate slows down to 15%, we'll start focusing on EPS. But until then, we're going to focus on growth. But I like growth companies, so I wouldn't want to be involved at that point. But while they grow at a 38% year over year rate, I'm going to be very involved. But until then, they're doing very well. I'm not even hating on PayPal, but just look at their growth. I really want to like PayPal. 25% cash. You have any recommendations, Tanner? No. It's not that I'm at 0% cash right now. But if 25% cash makes you feel like you can operate in the markets a little bit easier and you can get in and out of positions, I mean, that's your strategy. Yeah. Jensen's comments about Palantir were very nice. He also did an interview with Karp afterwards. If you guys haven't seen that, there's an 11-minute interview with Karp and Jensen, and it's a good one. I mean, maybe we don't listen to the whole thing, but I do think that it's worth listening to. Here, let's we can get back to Visa and stuff, but right now it's literally absolutely flat. 0% on the day, and I don't feel like going through the press release until we have the earnings call, and then I can let the CEO speak for me. 1 second. Okay. Let's have a listen to this really quick. And if you guys want me to change it, I can.
Alex, I'm actually going to start with you, the CEO of Palantir, just to explain, does that mean no human intervention? Can you just explain how this would work and use Lowe's as an example?
Well, first of all, I'm delighted to be on the stage with what many people I believe to be one of the great entrepreneurs of my lifetime and a patriot. And it means a lot to me to be here. So we have a product called Ontology. You could think of it as essentially a digital representative of your enterprise, including security model, which essentially takes the disabilities out of large language models and allows you to move decision making to the front line with people, without people, depending on how you're doing it. In the context of Lowe's and other enterprises, it allows you to essentially automate decision making, like how would your supply chain work? How would it work if it changed? How do you get the cheapest good to the right place, given that there may be disruption? But in general, what's very, very special, I believe, about our partnership is we're going to be able to move 2x, and I think in the future even faster. So you get a much, much faster, and actually because you can control it in a more granular way, much faster, much cheaper. And then the macro thing that I'm actually most excited about, which for our country is, because of that, you can do manufacturing in America, you can make the workers stronger and better, and you have more competition because you can use open weight models, open source models. You can use any hyperscaler. You can decide not to use a hyperscaler. This is much, much better for America, much better for workers, much better for industry. It's cheaper, it's faster, and obviously they have one of the world's top tech teams, and we work very well with them.
So Jensen, just in regards to that collaboration, then who would actually be procuring the hardware? Is this like a company like Lowe's? Do they have to put the upfront cost, with their existing GPUs and then working with Palantir? Is that how it works? Or
first of all, it's amazing to think that the Palantir Ontology platform has achieved all of this, and they're the fastest enterprise growing platform in the world. In a lot of ways, it gives enterprises what we all want, which is intelligence and the ability to make good decisions fast. And now we're going to supercharge it with NVIDIA's accelerated computing for the first time. And so NVIDIA's CUDA accelerated computing is going to get integrated. We're going to be able to put NVIDIA's AI libraries on top of that and open source model that we're working on together into the Ontology platform. And you'll run it in the cloud, any cloud, or you run it on-prem or even a private cloud. And so, as you know, NVIDIA runs everywhere. And so you could buy a server from HP or Dell. You could be in another country and you want to set up your own private cloud. We got no trouble with that. And so it doesn't matter. We run everywhere, and Palantir runs everywhere.
But you're talking about the future then. So this isn't something that would be accretive to revenues just in the near term. You're still working it out. And like, I know Lowe's is an example, but are there other customers?
Well, at Palantir, we just do what's best for our customers. We work downstream for value creation. So we believe, we know when it's faster, better, more accurate, and more flexible, and creates a better future for them because they can choose how they want to run their applications. We'll do very well. And at Palantir, we're doing very well on revenue and profit, and that's not actually our primary motivation now. And the reason we've done so well on profit and on growth is because you just have to create value. This creates more value for the end user.
But you just said before, too, that the human may not even be involved with some of these decisions. And I guess that is a major concern in this day and age, that AI efficiencies could take away from or displace the job force. So couldn't something like this collaboration do that?
It's interesting. When you say humans don't have to be in the loop, that doesn't inherently mean there aren't cases where humans need to be in the loop. For example, 40 years ago, we had 40x more manufacturing jobs than we have now. So it's like you can make more manufacturing jobs, which are humans, working class humans. You can build things you couldn't build in the past. And those humans become more and more valuable than they were in the past. In the defense context, you have situations where humans have to be in the loop, offense. situations where humans shouldn't be in the loop, like defense. Our collaboration makes all those use cases better for workers, for manufacturing, for defense, for offense, and in general, because it allows people to use any kind of model, any kind of compute structure. It makes America stronger and better.
Whenever a business is more productive, whenever they can move faster, their business grows. They hire more people, and so I think this idea that AI is going to take jobs is going to change everyone's job. That's for sure. But I think it's going to make companies more productive. We're more productive today because of AI. We're hiring more people.
I know, and we saw some leaders of smaller companies, startups that have been around for just 3 years, valuations of $39 billion, 400 employees, and clearly that is a beneficiary of using AI. But I wonder, with your proximity to the White House right now, you're here quite often. Is that a concern that you're hearing from them? Like, what about the workers? We have to make sure that we're not displacing them. And is there anything that you guys are, NVIDIA in particular, is doing with the White House?
Look at what President Trump is doing. The first thing, my first phone call, my first meeting with him, it's manufacturing in America. Move manufacturing back to the United States. It creates tons of jobs. If we could move manufacturing, the core technology, we have better security, national security, we have create more jobs. Second, because we're talking about the AI industrial revolution, all of these AI factories creates a ton of jobs. And so he's really in the job creation mode, bringing manufacturing back to the United States. And
AI is exceedingly good for working class workers. Now you could argue, is it good for consultants and people? That's a very different debate. But you're going to see remanufacturing. How would you build a culturally specific enterprise? Like, we power Panasonic batteries. It's like you're building something that otherwise would have had to be built in Japan. Now you can build it in America. You can train the workers so that they can behave like Japanese engineers. That's all AI augmentation. And by the way, the workers are more valuable, and just like us, they get paid more because they're more valuable.
Everybody knows how to use an AI because AI is smart.
Did you guys also hear that buzzing noise? I want to listen to this video, but I'm hearing a buzzing noise from this video, and it's driving me nuts. Is anyone else picking up on that, or is it just me? It's like in the back of my head. Yes? Okay, good. Well, honestly, not good, because boy, oh boy, does that suck. But I was hoping for my case, because I was looking at the comments and I saw like no one was saying anything. So I was like, this is a me problem. I'll suffer through it. You guys are way too tough. I would have logged off. This is driving me nuts. Hopefully there's a cleaner version online, because I would love to finish that. I try to listen to as much content as I can from Karp and Jensen. They definitely have very strong opinions. Karp much more willing to pick a side. Jensen very good at sort of befriending both. But yeah. Oh, we're missing the buzz now. Bring the buzz back. Bring the buzz back. It's all the GPUs. Yeah. Okay. Yeah, dude, SoFi stock, the sort of journey that this name takes us on, from being like up in the day, breaking new highs whenever it first opens, to crashing down, not crashing, but having essentially a 5% move from being up 2% to down 3%, and then ramping back up to plus 5%, like where we were in pre. I hope that we see $32 tomorrow on the FOMC meet, but we'll see. The market's very forward-looking and sometimes can price a little bit of that action in before those things actually come to pass. We'll find out what happens. But, yeah. Okay. Visa, by the way, which we're going to be jumping into this earnings, is completely flat on the day. Earnings are in 10 minutes. I'm just trying to get across some of the things that ended up happening today between now and then it'll be full focus on Visa. But or I could keep it for another stream tonight. Yeah. There's going to be a lot of earnings over the next few days, by the way, ladies and gentlemen. So if you're new to the channel or anything along these lines, I don't know Visa very well. I still want to listen to these companies and constantly learn a little bit more about these names. But over the next few days with Microsoft, Google, Meta, Amazon, Apple, I know a lot about those names, some of them. And a big shareholder in Google and Amazon for sure. Meta, we definitely have to listen to. There will be a lot of good information there as well. And those will be very important. Visa, on the other hand, I'm just reading for the sake of, fintech in general, which I am involved with some of the names that, I invest in. In our fourth quarter, this is Visa, continued healthy customer spending drove net revenue up 12% to $10.7 billion. For the full year, Visa delivered strong performance with net revenue of $40 billion, up 11%, and broad-based growth across key metrics, underscoring the durability of our diverse business model. And we continue to invest in our Visa as a service stack to serve as a hyperscaler across the payments ecosystem. As technologies like AI-driven commerce, real-time money movement, tokenization, and stablecoins converse to reshape commerce, our focus on innovation and product development positions Visa to lead this transformation. Let's see what they do have to say about stablecoins. Wow, only one comment of stablecoins in their entire press release. What about AI? I can't find anything on that either. Visa repurchased approximately 14 million shares of Class A shares at $350 per share, or $5 billion worth of buybacks. And over the last 12 months, they've repurchased $18 billion. So an acceleration of buybacks closing out the rest of the year. They also have a remaining $24.5 billion, which is more than what they repurchased this year, in already authorized funds for repurchase as of the end of their fiscal Q4. Very, very good. Yeah, we already talked about their revenue lines here. There's not too much that is standing out. This is just a quality business. Like, yeah, it's going to be, for me, it's listening to the earnings call to hear what they're focused on, because I don't know Visa well enough. NVIDIA. Oh my gosh, NVIDIA. No, he's right. He's right. Holy crap. 203.88. Oh my gosh, we're up 1.4%. What the heck happened? What happened? Or is this just not on a ton of volume? It's on not a lot of volume, so keep that in mind. But that said, we're almost at 204 right now. Are we about to break 204? No? Well, we know Jensen delivered, but what else was it? Yeah, I'm not here to say that I was right. I mean, fundamentally, it's what I worry about, is whether or not the company is going to deliver. My expectations were too bullish. And I think that was because, one, Sensor Tower data was way too good, but it turned out to not be the right data to follow this time. It was not very accurate. Not that their downloads were wrong, but that the conversion rate was different than expected. So that was not a good indication of growth on the member side. In the next breath, I think I got swayed by a couple products that are going to bring in a lot of revenue, but not immediately. You know, SoFi Invest was really strong, but it wasn't nearly as strong or impactful as what I thought it would be. So to that extent, I was wrong. Is SoFi going to continuously climb higher? Yes, because they definitely destroyed Wall Street expectations. However, Devin Ryan, the person that we were looking to as well as being like the most bullish person on Wall Street and also has the highest success rate, he was wrong this quarter in quite to quite a large degree. He was more bullish than me, and I was too bullish for the quarter. So to be fair, I was wrong, but not on the idea that SoFi is a winner. I think it's very clear that they are. Wow, 204.20 on NVIDIA. Let's get these Visa earnings going as we're about to jump into this webcast in just the next few minutes. Okay. Wow, 204.50. Oh my gosh, guys. This is the largest company in the world. Say goodbye to your covered calls. It's done. You sold your position. However, after this, I might have to write some covered calls. After this, tomorrow morning, we open the day at 204, something like this. I'm probably going to have to write some covered calls. And when I mean some, I mean like maybe my whole position. But then again, if what really, and if Jensen is right, and Wall Street's expecting 370 billion of data center revenue, and what we, see is 500 billion over the next 6 quarters, then we are way under invested right now. The company can definitely push higher. 204.75. We're going to see a quarterly result here soon. So that's also going to affect multiples and everything as NVIDIA is growing still quite fast. $204.75. Man, that is getting awfully close. 204.75 is getting awfully close to $5 trillion. I think it actually might be. Can you believe if NVIDIA hit $4 and $5 trillion in the same year? The first company to break 4 trillion and the first company to break 5 trillion? And then what if they show off their earnings and then people continue to raise this stock? Like, I wonder if my, original $250 price target is even that out of like that crazy of a target anymore. We'll see. We will see. Okay, Visa earnings here starting in the next minute or so. Okay. By the way, Bloom Energy up 3.7%. Visa up 0.7%. Aurora down 1%. Seagate up 4%. Booking Holdings up 3.7%. Enphase down 7.6%. This one continues to be a bloodbath. And NVIDIA just mooning. But we're going to hear more on Visa whenever the quarter starts here. Also, I wanted to see if there was any more commentary, CEO commentary on This name? Here, wait, what's going on with Joby? Joby Aviation is partnering with NVIDIA? Joby up 8% in the after hours. 1683. 1683 on Joby. It might be 5 trillion now. I'm not sure. What if NVIDIA hits $10 trillion market cap in the next 5 years? They need to put up some pretty significant growth. Oh, Visa's quarter is starting. Let me jump over to that.
Question and answer session. Today's conference is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the conference over to your host, Ms. Jennifer Como, Senior Vice President and Global Head of Investor Relations. Ms. Como, you may begin.
Thank you. Good afternoon, everyone, and welcome to Visa's fiscal fourth quarter and full year 2025 earnings call. Joining us today are Ryan McInerney, Visa's Chief Executive Officer, and Chris Suh, Visa's Chief Financial Officer. This call is being webcast on the Investor Relations section of our website at investor.visa.com. A replay will be archived on our site for 30 days. A slide deck containing financial and statistical highlights has been posted on our IR website. Let me also remind you that this presentation includes forward-looking statements. These statements are not guarantees of future performance, and our actual results could differ materially as the result of many factors. Additional information concerning those factors is available in our most recent annual report on Form 10-K and any subsequent reports on Forms 10-Q and 8-K, which you can find on the SEC's website and the Investor Relations section of our website. Our comments today regarding our financial results will reflect revenue on a GAAP basis and all other results on a non-GAAP nominal basis unless otherwise noted. The related GAAP measures and reconciliation are available in today's earnings release and related materials available on our IR website. And with that, let me turn the call over to Ryan.
Thanks, Jennifer. We finished fiscal full year 2025 with strong financial performance, an ever-growing obsession for our clients, and a sharp focus on innovation as we build the future of payments. Fiscal fourth quarter net revenue grew 12% year over year to $10.7 billion, and EPS was up 10%, resulting in full year net revenue and EPS year over year growth of 11% and 14% respectively. Total full year payments volume was $14 trillion, up 8% year over year in constant dollars, and processed transactions totaled 258 billion, up 10% year over year. Our financial performance and growth demonstrate how Visa has become a hyperscaler, enabling anyone that wants to be in the money movement or payments business to build on top of the Visa as a Service stack. You may recall the layers of the stack: the foundation layer, the services layer, the solutions layer, and the access layer. Throughout 2025 and most recently in Q4, we have intensified our investment in innovation. Today, I want to highlight Visa's progress with our clients and the ecosystem at large across the Visa as a Service stack, starting with the foundation layer. At the foundation of the stack is our global connectivity, our network, and our network of networks that enable global commerce and money movement. In full year 2025, we expanded our network of networks in 3 important ways. First, more connection points. Visa's network of networks now has approximately 12 billion endpoints. That's about 4 billion cards, bank accounts, and digital wallets each. Second, more settlement currencies. We are adding support for 4 stablecoins running on 4 unique blockchains representing 2 currencies that we can accept and convert to over 25 traditional fiat currencies. And third, we have begun deployment of the next generation of VisaNet, the core processing platform in our Visa as a Service stack. It offers a cloud-ready, microservices distributed, modular architecture that uses open languages and technologies, enabling easier scaling, configuration, and faster feature deployment. Over half of the new code base was built with the assistance of generative AI, improving development speed, security, and maintainability. We have specific modules in market today with plans to roll out additional modules and markets. The next level of the Visa as a Service stack is our services layer, which encompasses the building blocks of our core capabilities, including credentials, tokens, authentication, risk management, fraud detection, and more, which we've turned into discrete modular components. We grew the number of Visa credentials by 270 million this year, and we continued to sign many deals this past quarter to drive further growth. I'll share a few regional highlights. We are pleased to have renewed our nearly 60-year relationship with Barclays in the UK and the US across their millions of customers in consumer and commercial issuing and acquiring, and enabling increased focus on value-added services utilization. In the US, Visa continues to be the exclusive payment network for the Southwest Airlines co-brand program, and we will soon be expanding our relationship into a co-brand debit offering, providing customers a new way to earn rapid rewards points on everyday purchases. In Latin America, we won the new Scotiabank Wealth Management credit card issuance with our Visa Infinite product across 7 countries. And in mainland China, one of our largest clients, China Merchants Bank, has renewed their long-standing relationship with us as we continue to upgrade China's magstripe dual-branded cards to contactless EMV chip cards. Moving to tokens, we now have over 16 billion Visa tokens, up from 10 billion just in May of 2024. We continue to increase the amount of Visa tokens globally in pursuit of our ultimate goal of 100% of e-commerce transactions tokenized. We continue to enhance our risk management capabilities, including Visa Scam Disruption, which proactively detects scam activity at the network level that no single issuer, acquirer, or merchant could see alone, and leverages AI, enhanced merchant monitoring, external intelligence feeds, and our global expertise. Just a year since launch, we have worked closely with our clients and law enforcement to dismantle more than 25,000 scam merchants, representing more than $1 billion in fraud attempts. Our stablecoin platform is another key component of our services layer. Since 2020, we've facilitated over $140 billion in crypto and stablecoin flows, including Visa users purchasing more than $100 billion of crypto and stablecoin assets using their Visa credentials, and spending more than $35 billion in crypto and stablecoin assets using Visa credentials. Within this, we see particular momentum with stablecoins. We now have more than 130 stablecoin-linked card issuing programs in over 40 countries, and in Q4, stablecoin-linked Visa card spend quadrupled versus a year ago. We expanded the number of stablecoins and blockchains available for settlement, and monthly volume has now passed a $2.5 billion annualized run rate. We are starting to enable banks to mint and burn their own stablecoins with the Visa Tokenized Asset Platform, and we are adding stablecoin capabilities to enhance cross-border money movement with Visa Direct. In September 2025, we announced a stablecoin pre-funding Visa Direct pilot targeting banks, remitters, and financial institutions seeking faster, more flexible ways to manage liquidity. And there is much more to come in this space. The next level of the Visa as a Service stack is our solutions layer. Our comprehensive portfolio of solutions where we have taken the componentized capabilities from the services layer and invested in and enhanced them to create new features and capabilities we deliver to a broader array of customers and partners. If we look across our growth levers in this layer, I would note progress in a number of areas. In consumer payments, Visa Intelligent Commerce integrates Visa's token technology with authentication and predictive analytics, empowering partners to deploy secure, personalized digital commerce experiences. And I'm pleased to announce that we are now powering live agentic transactions and recently released a merchant agent toolkit to make it easy for developers to embed our solutions into workflows and agentic processes. Just 2 weeks ago, we announced the Visa Trusted Agent Protocol, a framework that enables safer agent-driven checkout by helping merchants verify agents and avoid malicious bots. And since it's built on existing messaging standards, minimal integration is required for merchants. Next, our Visa Flex credential continues to gain momentum, enabling consumers to access many underlying funding sources with a single credential powered by Visa token technology. For example, the Klarna card launched in 15 European markets, building on its success in the US, where it had over 1 million signups in less than 3 months, and they will expand to even more markets soon. Our Visa Flex pipeline is strong, and we now have more than 20 signed clients in more than 20 countries across all regions, including our first Visa Flex announcement in LAC with Nico. Our Visa Accept solution enables even the smallest of sellers to accept card payments with just a Visa debit card and an NFC-capable smartphone. Our first live launch of Visa Accept was in Sri Lanka, which represents an opportunity to bring an estimated 7 million sellers onto the Visa network, most of which are informal sellers who primarily transact in cash today. And this is just our first launch. We are targeting 25 countries across several regions where we expect to launch Visa Accept soon, with even more expansion to follow. Our Visa Pay solution connects any participating wallet to any Visa accepting seller worldwide, local or international, in-store or online. We are pleased to now be processing live Visa Pay transactions in 4 markets across AP and CEMEA, including our recently announced market launch in the Democratic Republic of Congo. In addition, we have a pipeline with more than 70 clients to expand across more markets in 2026 and beyond. Rounding out consumer payments is Tap to Everything. 79% of all face-to-face transactions are taps, up 8 percentage points this year, with the US at 66%. Our transit initiatives contributed to this expansion, and this year, we enabled more than 100 new transit systems to now total approximately 1,000 systems globally, delivering 19% year-over-year growth in transactions. In Europe, BBVA recently launched BBVA Pay, enabling tapping from an iOS device for all Visa cards within their banking app. They also have enabled customers to use AI to create their own personalized Visa cards, starting in Spain. Tap to Phone, which provides an easy, low-cost method for micro sellers to begin accepting card payments or large sellers to add additional mobile terminals, has now passed 20 million transacting devices, more than doubling since last year, with strong growth across all regions. And Tap to Add Card, launched a little over a year ago, has strong adoption as consumers and our partners see the value of a simplified, more secure customer experience where a simple card tap to a mobile device can add a Visa credential to a digital wallet. Since Q3, we have doubled the count of issuers participating globally to more than 600 across all regions, resulting in the service being live for more than 1.4 billion Visa credit and debit cards around the world. Shifting to CMS and starting with Visa Commercial Solutions, our full year 2025 commercial payments volume grew 7% in constant dollars to $1.8 trillion. This was helped by targeting specific segments, including business owners and online travel agencies. In the premium card segment, we supported Chase with the launch of Chase Sapphire Reserve for Business on Visa Infinite, an expansion of the Sapphire Reserve product line. The Sapphire Reserve for Business card is designed to meet the needs of business owners by elevating their travel experience and offering premium benefits and value toward business services to help fuel their growth. And also in the US, we're excited to have partnered with Truist to launch the Truist Business Premium Visa Infinite Card, a premium credit card designed for small businesses with meaningful annual spend. They are the first super regional to do so in this country. Our purpose-built travel solution offers virtual card credentials, automated reconciliation, and rich data. We recently won Trip.com's global virtual travel card issuing business, which will be issued through their fintech TripLink. In our traditional carded business, our global network-agnostic enhanced spend management capabilities have helped us to expand our partnership with BMO. We recently won new commercial issuance, and BMO will offer our Spend Clarity for Enterprise tool to their corporates in the US and Canada. Our unique FX capabilities enabled us to win a de novo issuing relationship with ICICI Bank for India's first corporate Forex prepaid card, targeting both SMBs and large corporates to meet foreign exchange payment needs for business travel. In fact, in India, Visa SMB cards have doubled since 2020 and now total more than 10 million, helping us to grow total commercial cards to 340 million worldwide. Moving on to Visa Direct, which reached 12.6 billion transactions in full year 2025, up 27% year over year. Our push to account and wallet funding capabilities continue to help us to expand cross-border payouts. We signed with KCB in East Africa, where they will use Visa Direct to Account for 8 corridors across their more than 30 million individual and business customers. Touch and Go e-wallet, the largest wallet in Malaysia with more than 24 million users, will leverage Visa Direct to enable tourists to fund their wallets across 8 corridors. And Al Rajhi, a leading remitter with the largest branch network in the Kingdom of Saudi Arabia, expanded on its Visa Direct to Card usage to now include Visa Direct to Account. And our interoperability capabilities, unlocked through our Yellow Pepper acquisition, enabled us to renew with Yape and Plin, securing our position as the leader for interoperable transactions in Peru. Now moving to value-added services, where we have seen our innovations across issuing, acceptance, risk, and advisory continue to power our growth. We have achieved our goal to expand Pismo's offerings to clients in more than 5 countries across 4 regions in 2025. In the fourth quarter, we signed our first Pismo deal for a stablecoin-linked card with Gnosis Pay in Europe. In acceptance solutions, our token management service, or TMS, provides a single network and payment service provider agnostic integration to simplify token adoption, access, and management for merchants and acquiring clients. This quarter, we signed with Booking.com for TMS and account updater across more than 65 markets, deepening our presence in the online travel platform space. Many of our risk and security solutions are also network agnostic. Let me highlight a few points of progress. Visa Advanced Authorization evaluates more than 400 unique attributes in a few milliseconds, and this quarter, Banco Diners in Ecuador deployed our network agnostic solution to score both Visa and non-Visa transactions, the first bank in LAC to do so. Our award-winning product, Visa Protect for A2A, is delivering value with AI. Our pilot in Brazil scored nearly $500 billion of our bank partners' PIX volume over a 6-month period and identified over $90 million of fraud which could have been prevented with a detection rate of more than 80%. We believe Visa Protect for A2A can play an important role in Brazil by providing real-time fraud monitoring on PIX, helping to reduce fraud for our bank partners and ensure a safer payment experience for buyers and sellers. Our most recently acquired risk capabilities from Featurespace are being sought after by our clients with more than 100 closed client deals since January. And our advisory services continue to deliver revenue and deepen our client relationships across Visa. In consulting, we estimate that we helped clients realize over $6.5 billion of incremental revenue as a result of delivering almost 4,500 engagements during the year, including Gen AI and stablecoin engagements. In marketing services, our flagship sponsorships include the FIFA World Cup 2026 in the US, Canada, and Mexico, as well as the Olympic and Paralympic Winter Games in Milano Cortina. We are already seeing significant interest from our clients as they seek to offer unique cardholder experiences and build their brand, in addition to helping drive issuance, acceptance, and engagement. One Olympic and Paralympic related marketing example was our first large-scale campaign created using generative AI tools for Intesa Sanpaolo, which showcased a ski race down the streets of Italy's seaside villages. We already have over 35 clients engaged with us for marketing services for the 2026 Olympic and Paralympic Games, and more than 70 for the FIFA World Cup 2026, with more than 100 already in our pipeline. The fourth and final layer of the Visa as a Service stack, on top of the foundation layer, the services layer, and the solutions layer, is the access layer, the client entry point to access Visa solutions. We take an open partnership approach and seek to provide value by enabling access to our Visa as a Service stack through multiple integration methods, including custom integrations, programmatic access via APIs, and structured data exchange through our Model Context Protocol, or MCP server. We remained the payments platform of choice in full year 2025, with more than 700 billion API calls across our more than 3,700 endpoints. And we recently launched our MCP server, providing access for AI systems to interface with our Visa Intelligent Commerce APIs. Our open, flexible access layer enables anyone, whether a small business, a tech partner, or a global bank, to build on top of the Visa as a Service stack and operate at scale instantly. In conclusion, you can see our intense focus on innovation is delivering results for Visa and our clients. The Visa as a Service stack has positioned Visa to be a hyperscaler for the payments ecosystem. Our strong fiscal year 2025 performance is a result of our products resonating in the market and our commitment to our clients every day. I want to thank our more than 34,000 employees around the world who will continue to obsess about our clients and work tirelessly in 2026 and beyond to deliver value through the Visa as a Service stack to our clients and across our partner ecosystem. We live in remarkable times in payments as technologies are converging to reshape commerce. And at Visa, with our clients, partners, sellers, and consumers, we are keeping our focus on innovation and product development, positioning Visa to lead this transformation. Now to Chris, where he will discuss our financial performance and outlook for 2026.
Thanks, Ryan, and good afternoon, everyone. Building on the momentum we saw through the first three quarters, we had a very good Q4 to finish the year with continued strong and stable business drivers. In constant dollars, global payments volume was up 9% year over year, improving slightly from Q3. Cross-border volume, excluding intra-Europe, was up 11%, and total processed transactions grew 10%, both relatively stable to Q3. Fiscal fourth quarter net revenue was up 12% year over year, better than expected, primarily due to value-added services revenue, commercial and money movement solutions revenue, and a benefit from FX. Fourth quarter net revenue was up 11% in constant dollars. EPS was up 10% year over year in both nominal and constant dollars, better than expected, primarily due to better than expected net revenue. Let's go into the details. Total international payments volume was up 10% year over year in constant dollars in Q4, generally consistent with Q3. Of note, we saw acceleration in Asia Pacific of approximately 2.5 points on a constant dollar basis, driven by timing effects and a modest improvement in mainland China. U.S. payments volume was up 8%, slightly above Q3, with e-commerce growing faster than face-to-face spend. Credit and debit were both up 8%, reflecting resilience in consumer spending. When we look at quarterly spend category data in the U.S., we saw broad-based strength, including improvements in retail services and goods, travel, and fuel. Both discretionary and non-discretionary spend were up from Q3. And growth across consumer spend bands remained relatively consistent with Q3, with the highest spend band continuing to grow the fastest. Now, to cross-border volume, which I'll speak to in constant dollars and excluding intra-Europe transactions. Q4 total cross-border volume was up 11% year over year, relatively stable to last quarter, with e-commerce up 13% and travel improving sequentially to 10%. E-commerce remains strong, as it has for the last 8 quarters now, and still represented about 40% of our total cross-border volume. Travel spend continued to grow above pre-COVID levels. The slight step up from Q3 was led by a combination of factors, including increased commercial volumes, helped by our efforts in virtual card, and some improvement in CEMEA outbound due to holiday timing. With that as a backdrop, I'll move to discuss our financial results. Starting with the revenue components, service revenue grew 10% year over year versus the 8% growth in Q3 constant dollars payments volume, primarily due to card benefits and pricing. Data processing revenue grew 17% versus the 10% growth in processed transactions, primarily due to pricing and higher cross-border transaction mix. International transaction revenue was up 10%, below the 11% increase in constant dollar cross-border volume growth, excluding intra-Europe, primarily due to mix, partially offset by exchange rates. Other revenue grew 21%, primarily driven by growth in advisory and other value-added services and pricing. Client incentives grew 17%, in line with our expectations as we lapped one-time adjustments from Q4 of fiscal 24. Now to our 3 growth engines. Consumer payments revenue was driven by strong payments volume, cross-border volume, and processed transaction growth. Commercial and money movement solutions revenue grew 14% year over year in constant dollars as we lapped the one-time adjustment we saw in Q4 FY24. CMS revenue was better than expected, driven primarily by our commercial solutions business. Commercial payments volume grew 10% in constant dollars, 3 points above Q3 growth and faster than Visa's overall payments volume growth, primarily due to new portfolio wins and the lapping of certain portfolio losses, with strong client performance, especially in cross-border. Visa Direct transactions grew 23% to 3.4 billion transactions, with strength in both domestic and cross-border. Value-added services revenue grew 25% in constant dollars to $3 billion, driven by issuing solutions, advisory and other services, and pricing. Value-added services revenue growth was better than expected, primarily due to issuing solutions, both in network products and card benefits. Operating expenses grew 13%, above our expectations due to larger than expected FX impact and higher than expected personnel expenses as a result of deferred compensation mark-to-market, which, as a reminder, is EPS neutral. Excluding those 2 factors, adjusted operating expense growth would have been as expected. Non-operating income was $29 million, higher than expected due to investment income from the deferred compensation mark-to-market benefit that offsets the expense I just mentioned, and higher returns on our investments. Our tax rate for the quarter was 18.8%, in line with expectations. EPS was $2.98, up 10% year over year, with minimal impacts from exchange rates and acquisitions. In Q4, we bought back approximately $4.9 billion in stock and distributed $1.1 billion in dividends to our shareholders. We also funded the litigation escrow account by $500 million, which has the same effect on EPS as a stock buyback. At the end of September, we had $24.9 billion remaining in our buyback authorization. With a strong finish to the fiscal year, our full year net revenue grew 11% to $40 billion, and EPS grew 14% to $11.47. Full year 2025 CMS revenue growth was 15%, and value-added services revenue growth was 23% on a constant dollar basis. In a year marked by a significant step up in uncertainty around the globe, we delivered strong results above our expectations. As we think about 2026, our guidance philosophy holds. We give you our best perspective based on current information. So let's get into the guidance details. And a quick note, when I reference 2025 and 2026, I am referring to our fiscal years. First, let's cover our underlying assumptions for net revenue growth. As we regularly say, we are not economic forecasters. So we're assuming the macroeconomic environment stays generally where it is today and consumer spending remains resilient. On key business drivers, we are assuming no material change from the Q4 2025 growth levels in 2026. On pricing for 2026, we expect the benefits of new pricing to be similar in magnitude and timing as in 2025, with the majority going into effect in the back half. When you combine that with the 2025 pricing timing, this implies a relatively uniform contribution each quarter, with Q1 seeing the largest contribution. On incentives, we expect around 20% of our payments volume to be impacted by renewals this year, which implies incentive growth generally similar to 2025, with Q3 having the toughest comparable to 2025. On volatility, we expect volatility throughout the year to be generally consistent to where we exited Q4, which implies a drag for the first 3 quarters, with Q3 having the toughest comparable to 2025. We pull these assumptions together on an adjusted basis, defined as non-GAAP results in constant dollars and excluding acquisition impacts. You can review these disclosures in our earnings presentation for more detail. In 2026, we expect full year adjusted net revenue growth to be in the low double digits. On a nominal basis, we expect an approximately half-point benefit from FX, which implies nominal net revenue growth that is generally consistent with fiscal 2025, which was 11%. We have an exciting year with the Olympic and Paralympic Games in Q2 and the FIFA World Cup in Q3 and Q4. I'll speak to expense in a moment, but as far as net revenue impacts, we expect the benefit from value-added services to be spread throughout the year, as our clients will utilize our solutions in the build-up to and during the events. In terms of quarterly variability of net revenue, 2 items I would call out. First, we expect Q1 to have the highest year-over-year net revenue growth rate, primarily due to the timing impact of our FY25 pricing actions. Second, we expect Q3 to have the lowest year-over-year net revenue growth rate, primarily due to the lapping impacts of strong volatility and lower than expected incentives in Q3 of 2025. Now moving to expenses. We expect to continue our significant investments in our Visa as a Service stack across consumer payments, commercial and money movement solutions, and value-added services in FY26. Let me share a few examples. Within consumer payments, we will enhance our cross-border and affluent offerings, scale recently launched products, and expand our stablecoin capabilities, in addition to utilizing our marketing dollars for both the Olympics and FIFA to amplify the Visa brand. Within CMS, we'll focus our investments in specific commercial vertical opportunities and build out new Visa Direct product capabilities focused on cross-border money movement. And within VAS, we'll invest in our product development as well as our sales engineering teams to deepen customer engagement and shorten deal cycles. In addition, we're also investing in our AI efforts. In fact, every leader at the company has AI targets to drive efficiencies that we intend to invest back in the business to further our differentiation, competitive advantage, and drive long-term growth. We currently expect to grow adjusted operating expense in the low double digits, consistent with our net revenue growth. As we think about the cadence of spend, we expect Q2 and Q3 to have the largest year-over-year growth rates as a result of marketing expense related to the Olympics and FIFA. Now moving to non-operating income. The non-operating income we've had for the past 3 years has been a function of cash balances, interest rates, and one-time items. In 2026, based on our current interest rate forward curves, we now expect non-operating expense of $125 to $175 million. Now to our non-GAAP tax rate. You may recall that we've historically estimated our long-term tax rate to be between 19 and 20%, and this remains unchanged. In both fiscal 2024 and 2025, our actual tax rate was below 18%, helped primarily by our geographic mix of earnings and certain one-time benefits, such as the resolution of tax matters and positions taken on certain taxes. In 2026, we still expect to be below our long-term tax rate. When we incorporate our current tax planning strategies, we expect the tax rate to be between 18.5% and 19%, up from 2024 and 2025, primarily due to the absence of one-time benefits. On capital return, the board has declared an increase to our quarterly dividend by 14%, and we intend to return excess free cash flow to shareholders through buybacks. All of this results in our adjusted EPS growth to be in the low double digits. Moving to Q1. Through October 21st, with volume growth in constant dollars, U.S. payments volume was up 7%, with credit and debit both up 7%. Processed transactions grew 9% year over year. For constant dollar cross-border volume, excluding transactions within Europe, total volume grew 12% year over year, with e-commerce up 14% and travel up 11%. Now on to our financial expectations. We expect Q1 adjusted net revenue growth in the high end of low double digits. We expect adjusted operating expense growth in the low double digits. Non-operating expense is expected to be about $15 million. And our tax rate in the first quarter is expected to be around 18%. As a result, we expect adjusted first quarter EPS growth to be in the low teens. When we look on a nominal basis for net revenue growth in Q1, we expect an approximately half-point benefit from FX. And for our expense growth, we expect an approximately half-point drag from FX and a 1-point impact from acquisitions, which taken together result in nominal net revenue and expense growth that are more matched at the high end of low double digits. As always, if the environment changes and there are events that impact our business, we will remain flexible and thoughtful on balancing short and long-term considerations. Visa's underlying business continues to be healthy, and the growth opportunities are significant, together giving us conviction as we make investment decisions to build the future of payments to drive compelling net revenue and earnings per share growth. And now, Jennifer, I'll hand it back to you.
Thanks, Chris. And with that, we're ready to take questions.
Thank you. If you would like to ask a question, please press star one and clearly record your name. You will be announced prior to asking your question. To ensure all questionnaires are heard, we ask that you please limit yourself to one question. Once again, to ask a question, please press star one. To withdraw your question, please press star two. Our first question comes from Sanjay Sakhrani with KBW. Your line is open.
Thank you. Like the outlook, it's very strong. I guess when I think through some of the assumptions that are embedded in it, I know, Chris, you talked about assuming the macro is stable, but we've heard some of your competitors talk about, choppiness in the economy, different spending habits, especially for consumers as they've been trading down on discretionary items. I mean, have you guys seen anything like that? And sort of how does that factor into your outlook? Thank you.
Hi, Sanjay. Yeah, we have great momentum exiting FY25, and that's the underlying assumption as we go into 26 for another strong year. But let me address some of the specific points you made about questions you had around sort of, I guess, spend and the strength of the macro economy. I mean, if I just zoom out a little bit, really one of the real strengths of our business here at Visa is the diversification of our business. And so we have the broadest exposure to credit, to debit. Our volumes are comprised of everyday spend to special occasion spend, non-discretionary like fuel and groceries, and discretionary items like travel or holidays, goods, services, consumer, commercial. And so really some of the broadest spend categories that you can imagine. And what we do is we remain data-driven. And across this broad and diverse set, the growth across our spend bands has remained quite consistent all year. And it was again in Q4, with higher spending cardholders driving more of the growth. And that's consistent with what we see across the U.S. economy. And so that all gives us good reason when we reason over that data to say the consumer has remained resilient. That is what we saw in FY25, and that is our assumption going into FY26.
Next question, please.
Thank you. James Fawcett with Morgan Stanley. Please go ahead.
Great. Thank you very much. Really appreciate all the work that you guys are doing on new initiatives, et cetera. One that's quite topical, obviously, is all things agentic commerce. And I know you've had some recent announcements on that topic. Can you paint a picture for us, like the role that you expect Visa to play in agentic commerce transactions and ramp and kind of milestones we should expect to see in its development? Thanks.
Thanks. We see considerable opportunity in agentic commerce. But just to put it in context, when we had the first wave of digital commerce with e-commerce, we set the standards, we led the product development, and Visa was a significant beneficiary. Then you saw a second wave of commerce, which was mobile commerce. And again, Visa was the leader in terms of standards, in terms of product innovation, in terms of the capabilities enabling that to happen. And we've been a big beneficiary. You've seen that both in people buying things on their phones, but also using their phones to buy things, especially with Tap to Pay. And now in this third wave of agentic commerce, we've been leading in terms of our role of setting the standards. I think one great example of that is Visa Intelligent Commerce, where we put out a set of capabilities for AI-ready cards, leveraging tokenization, AI-powered personalization, leveraging our data token service. We put out a set of standards with payment instructions that are going to allow customers like you and I to easily set spending limits and conditions to provide clear guidance for agent transactions, and also our payment signals, which are going to share those data payloads in real time with Visa, enabling us to help set transaction controls, manage disputes and chargebacks, and those types of things. So I think that's a great example of the leadership role that we're taking in agentic commerce. And then just 2 weeks ago, we announced the Visa Trusted Agent Protocol. The Visa Trusted Agent Protocol is meant to really ensure that merchants know when an agent is coming to buy something on my behalf, it is actually a real agent that I have authorized to make purchases on my behalf. And I think what differentiates the Visa Trusted Agent Protocol is two things. One is it's open. It's an open set of standards, and we think that an open framework is critical to drive mass adoption in the way that's needed for agentic commerce. And the second is it's easy to integrate. We've built it on existing web infrastructure so that it's going to be easy for merchants to integrate into existing messaging standards and get up and running quickly. So those would be two examples. We're very excited about it. We think it's a significant opportunity for Visa and for everyone involved in the ecosystem.
Next question, please.
Thank you, Jason Kupferberg. Your line is open from Wells Fargo.
Hey, thanks, guys. I actually wanted to ask a follow-up on agentic, seems to be topic of the day. I'm just curious to get your perspective on when do you think we start seeing material volumes across the industry from agentic commerce? Obviously, there's still some important security considerations to be addressed, and would also love your perspective on to what extent you see agentic as more of a substitute for traditional e-commerce versus being additive to the TAM of the overall payments industry. Thanks.
Hi, Jason. Let me address the second part of your question first and then the first part. On the second part of your question, I think the base case is it continues to accelerate the adoption of e-commerce and mobile commerce as we all know it. I think there's an upside case on that where you could actually see users buying from a much larger and more diverse set of merchants than they do today in traditional e-commerce, given the power of these agents and their ability to go out and search the world's inventory based on whatever it is that you prefer for your agent. That might be value, that might be price, that might be inventory, that might be speed of delivery, and so on and so forth. I think that could ultimately result in consumers buying more things from more merchants, which ultimately means, more transactions on Visa. I also think there's a significant upside in the delivery and the relevance of our portfolio of value-added services for the entire ecosystem, especially, as you said, they have to work through a number of things that involve potential fraud and disputes and chargebacks and things like that. If I back to the first part of your question, listen, it's still early days. And I think what you're likely to see in the evolution of agentic commerce is not different or dissimilar to what we saw in e-commerce. I think early on, you're seeing consumers use these agents and these platforms for discovery. They're shopping. They're looking, for what might be available for any given gift I'm trying to buy or any clothing item that I might try to buy. But then I might jump to the actual merchant site to make the purchase. Then the next step of what you're starting to see is the integration of the buy capabilities into that shopping journey. That we're just starting to see that in the marketplace today. We've been working on that for many, many months with the ecosystem. And then I think the ultimate kind of user experience and the promise of agentic commerce will be truly empowering agents to go out to search for things on our behalf and ultimately make purchases and buy things without human intervention. That we haven't really seen in the marketplace today, but we're working very hard with the platform players to ensure that the capabilities are in place to enable that. Thanks, Jason.
Next question, please.
Thank you. David Koning with Baird. Please go ahead.
Yeah, hey guys, great job. The data processing yield was up a lot, and I know that was explained somewhat, but I'm wondering, is some of that due to VAS? The biggest part of VAS outside of others, probably in data processing. And I guess the question is there a sustainability to big yield growth in DP given VAS just keeps building? I guess that's the question.
Hi, David. I'll take this one. So yes, as you pointed out, data processing revenue 17% versus the 10% underlying transaction growth. The factors I called out in my prepared comments was around pricing and mix. And those were the two biggest variables. As you know, we implemented new pricing in FY25 in the second half of the year. That's really benefiting in Q3 and Q4, and that'll benefit into Q1, as I talked about as well. In terms of mix, now that what does mix mean? Mix does across our business different products and services different clients in different regions can have different varying yields. And obviously, through the course of any quarter, we see different growth performance across any of those particular elements that'll drive different yield outcomes. So in this particular quarter with data processing, we did see faster growth in higher yielding cross-border regions, and that's what contributed to the acceleration that you saw in between transactions and revenue in data processing.
Next question, please.
Thank you. Darrin Peller with Wolfe Research. Please go ahead.
Hey, thanks, guys. I just want to follow up one more time on AI and then a bigger question on the new VisaNet rollout. So first, just to be clear on AI, I mean, do you see your suite of services as a big part of what's being offered by, other payments ecosystem partners? And how much are you going to participate in some of those VAS in terms of fraud versus others? And then I know Ryan, you talked about VisaNet rollout, the new rollout, and just help us understand what that can mean for product development or velocity and how it positions the network for things like agentic commerce or stablecoins going forward. Thanks, guys.
Hey, Darrin. Short answer, long answer. Short answer is yes and yes, but let me dive into both of those. On kind of agentic commerce, I think you've seen from us really over the course of the year is Visa doing what we do, which is when there's new technology, new platforms emerging, take a leadership role in establishing kind of the way that payments can work most efficiently and most effectively for buyers and sellers. And we're doing that in the agentic commerce space today. And, I think to the first part of your first question, yes, you should assume that we're doing the work to build the infrastructure, the operating regulations and rules, the processes to enable a lot of the things that you're seeing kind of in the marketplace today. As I said on the earlier question, I think it was Jason's, it's still very early days. So you're going to see a lot of announcements. You're going to see a lot of things coming out. What ultimately is going to help kind of agentic commerce achieve its promise is collaboration among all of these various ecosystem partners that make e-commerce and mobile commerce and all of these things work today. And you should expect us to take the leadership role that we're taking. On the next generation of VisaNet, so this has been something we've been focused on as we continue to invest in our stack. We've deployed the next generation of VisaNet, which is our core processing platform, at the base of our stack. And the answer to your second question is yes as well. It allows us to ship product more quickly. It allows us to adapt to ecosystem changes more quickly. It allows us to adapt to regional and country-specific requirements more quickly. Here too, it's early days. We've just begun the deployment of it, but it's a very exciting milestone for us, and ultimately, we think it'll be great for the ecosystem and our partners.
Next question, please.
Thank you. Rayna Kumar with Oppenheimer. You may go ahead.
Hi, good evening. Thanks for taking my question. I noticed in Latin America there was a slight deceleration in volume versus last quarter. Anything to call out there? Thank you.
Sure. Yeah, in Latin America, we did see a bit of a slowdown. It still grew strong, but it was slower than we saw in Q3. And the biggest single contributor I would point to is the moderating inflation that we've seen in Argentina. But overall, across Latin America, it remains a high growth region, and we're very pleased with the performance.
Next question, please.
Thank you. Ken Suchoski with Autonomous Research. Your line is open.
Hey, good afternoon. Thanks for taking the question. Maybe just one more on agentic commerce. I was wondering if you could talk about some of the differences and similarities between Visa's trusted agent protocol and Stripe's agentic commerce protocol. I mean, anything you could talk about in terms of what layer of the value chain you're tackling and how your offering is differentiated versus theirs. And then maybe just talk about the broader tokenization opportunity and your leadership there with over 16 billion tokens and just how the agentic commerce ecosystem will leverage that. Thank you.
Yeah. Thanks, Ken. On the second part of your question, tokenization, I think, is the critical building block that ultimately will help agentic commerce reach its promise. And if you go back, I know you asked about the trusted agent Protocol, but if you go back to the Visa Intelligent Commerce set of products and standards that we put out, tokenization as a platform is what enables the bulk of that functionality, and ultimately is what's going to enable us all to have safe, secure, trusted transactions with agents on our behalf. So tokenization, critical building block of that. And as you noted, with kind of 16 billion Visa tokens embedded across the ecosystem, the technology, the standards are well known, well adopted globally in countries all around the world, both on the seller side of the ecosystem and the issuer side of the ecosystem, which is ultimately why it'll help scale our standards. As it relates to the trusted agent protocol, and I'll go back a moment to what I said to a couple questions ago. Ultimately, what's going to make this all work is collaboration. And so I think you're seeing a lot of different players across the ecosystem, whether it's Visa or other networks or acquirers or PSPs or platforms, start to put out their capabilities and standards. And again, here too, I think it's where the Visa Trusted Agent Protocol can form a base layer for everyone to build on and everyone to ultimately leverage. And the reason we're excited about the Trusted Agent Protocol scaling is the two things I mentioned. One is it's an open standard, and two, it is designed to be inherently lightweight and easy for merchants, especially to integrate to.
Next question.
Bryan Keane with Citi, please go ahead.
Hi, good afternoon. Thanks for taking the questions. Just a two quick parter. Just thinking about holiday sales growth rate this year versus last. There's some expectation that maybe holiday sales will be a little bit weaker in terms of growth rate. Just how is Visa thinking about that? And then secondly, just cross-border growth versus e-com versus travel. Any differentiation, kind of what we've seen on trend line as we go through this fiscal year? Thank you.
Okay, I'll take both of those. In terms of the upcoming holiday quarter, I've provided our guidance for Q1. It is for a strong Q1, carrying the momentum that we saw coming out of Q4 with strong and stable underlying drivers, as well as benefiting from the pricing from a year ago. And so when you add that all up, it makes for a resilient consumer, a stable macro environment, and the resiliency that I talked about across spend bands as well. And so we are anticipating a strong quarter going into the holiday, our fiscal Q1, the holiday quarter that we see. In terms of cross-border, your second question was really around sort of the mix. At the total level, we shared our numbers. It's been stable. It's been a good, strong number, 11% growth in Q3, 11% growth again in Q4. As we click down into the categories of e-commerce and travel, e-commerce has been strong, continued to be strong, and steady, 13% in Q3 and 13% in Q4. Travel did improve a point from Q3 as we talked about previously as well. So the thing that I would call out, though, is that when you add that all up, total cross-border growth continues to be above the trend that we saw pre-COVID. And part of the reason for that is that the e-commerce part of the mix of the volume is bigger. It was about a third of the business pre-COVID. It's about 40% now and continue to grow at a faster clip than travel. And so should that trend continue, we'll continue to see a bigger weight toward the e-commerce side of the business. But all in all, again, if you zoom out, strong and stable cross-border trends, and we'll continue to see how they perform through the rest of the year.
Next question, please.
Harshita Rawat with Bernstein, your line is open.
Hi, good afternoon. I want to ask about stablecoins. As the dust is settling a bit post the passage of the Genius Act, it increasingly appears that what was initially thought of as a risk to Visa could in fact be an opportunity in cross-border money movement, merchant acceptance in certain markets and services. Ryan, you talked about the momentum in stablecoin linked cards. This quarter, Visa Direct kind of announced a new stablecoin pre-funding option. The number of things you're doing here. I guess my question is, what are the most tangible areas of opportunity as it relates to stablecoins in the coming years, maybe in cards, BaaS, new flows, et cetera? Thank you.
Arshia, we've seen it as an opportunity for a while now. And the short answer to your question is we see opportunities in issuance, in modernizing our settlement network. I think I talked about some of the opportunities we've captured with our Pismo platform. As you said, we're leveraging stablecoins in cross-border money movement. We announced the Visa Direct pre-funding work. We're minting and burning on behalf of our clients with the Visa Tokenized Asset Platform. We've been working with our clients in our consulting business with stablecoins. I mean, the list goes on and on. But just stepping back, as I've said, the areas where there's product market fit for stablecoins in the world are the areas where there's significant TAMs and largely where we're underpenetrated. And that's emerging markets and that's cross-border money movement. And we have a deep product pipeline focused on putting products to market against both of those areas of opportunity. And by the way, cross-border money movement broadly, whether that's remittances or B2B or gig economy payouts or the like. So we definitely see it as an opportunity. We have targeted a significant portion of our product roadmap to capture that opportunity and hope to talk to you more about some products we're bringing to market in the future.
We're going to take a few more questions, so we are going to go a little over. I just want to try to get in a few more. Next question, please.
Andrew Schmidt with KeyBanc Capital Markets. Please go ahead.
Hi, Ryan. Hey, Chris. Thanks for taking the question and appreciate the Visa Stack discussion. That was a good one. Maybe I could ask about the Asia Pac improvement. Chris, I know you mentioned timing and China improvement, but if we could peel back the layers there and maybe talk a little bit more about what's going on and whether that improvement is sustainable, that would be great. Thanks so much.
Yeah, thanks, Andrew. As I talked about in my prepared comments, we were pleased to see the improved results, 2.5 points. And the things that that I noted, improvement in mainland China, and some smaller but idiosyncratic sorts of things around timing. Those will normalize its way out. All in all, we're pleased with the momentum in China and across AP in general, and think that is going to continue to be an important growth opportunity for us. And so when we zoom out from all of that, I think AP is on a directionally good track.
Next question, please.
Tim Chiodo with UBS. Please go ahead.
Great. Thank you. I want to talk a little bit about the evolution of the growth algorithm. Just looking at it numerically, it looks like the biggest change really is a few years ago, not too long ago, value-added services was about 20% of revenue growing in the high teens, and now it's approaching 30% of revenue and growing in the mid-20s. So the growth contribution has stepped up at least 200 basis points, if not closer to 300 basis points. And part of that has been we've seen the RPO tick up over the years. And even this year, the RPO has been up roughly, give or take, 30%. And I was hoping you could talk a little bit about that RPO. What's been driving that roughly 30% growth? I appreciate part of that is value in kind incentives, but maybe dig into that and other drivers of the RPO.
Yes. Why don't I take the first part of the question, and then Chris, you can take the second part of the question. Tim, I think you summarized it very well. And I think if you go back to Investor Day and you look at kind of the growth framework that we laid out and the strategies that we laid out, by the way, both for VAS and for CMS, and you jump forward to today, we're delivering in market those strategies, and we're delivering the results that I think we laid out in that framework that come with those strategies. And you summarized it pretty well on the VAS side of things. As you want to talk about the
Sure. Tim, I think this. Obviously, the RPO constitutes many things, but included in that is what you've asked about previously, which is value in kind. This is an important lever for us. When we are able, it represents a form of incentive that clients can then use to drive value for themselves, and it's good for our client engagement and continues to drive value to Visa, sometimes in value-added services, but in other parts of business. Now, it doesn't drive sort of the majority of value-added services, but it is an important lever, and I think it's an area where we'll continue to see clients really take advantage of.
All right, I think we're ready for our last question.
Thank you. Tien-Tsin Huang with JP Morgan. Please go ahead.
All right, let's close it out. I'll ask about investments and OpEx, if that's okay. Just thinking about growth and OpEx being in line with revenue. I'm curious if there's anything to share on that. Is Visa just being opportunistic with spending, or perhaps it's a structural issue as you scale different layers in your service stack and some of those are less mature? Just trying to better understand incremental margins and how that might be changing. Thanks.
Sure. Tien-Tsin, as you know, as we've said in the past, explicitly, we don't manage our company to a margin target, at least not in the classical sense, but we do focus on many things. We focus on growing volumes with our clients. We focus on driving revenue across consumer payments, VAS, and CMS. And we also focus on running our business as efficiently and as effectively as we can. And part of that is balancing the investments that we make for short, medium, and long-term return. And when we do this well, as we have, we continue to deliver the financial performance that you've seen, which is strong growth at margins that lead the industry. So I would say, in terms of where we're investing now, as we talk about 26, I would point you back to actually our Investor Day back in February. We laid out a pretty extensive view of the big opportunity that we're going after, the massive addressable opportunity, and two, the clear strategies, the things that we're going to go do to go capture that opportunity. And so across our industry, as things continue to move as fast as they are, you've heard a lot of the conversation even today around agentic and stablecoin. We think it's important that we continue to invest in these opportunities from our position. And if we do so, we'll continue to deliver on the growth framework that we outlined at Investor Day, which means we'll deliver compelling profit growth and drive strong shareholder returns.
And hey, Tien-Tsin, the only I would add on what Chris said is I don't ever recall being so excited about the opportunities ahead of this company. And I don't ever recall being so pleased with how well our teams have lined up our product pipeline, our go-to-market sales motions, our client teams, the things that we talked about today, whether it's agentic, stable coins, Visa Pay, Visa Accept, Tap to Everything, the great momentum in the VAS business, the great momentum in Visa Direct, the great momentum and results we're seeing in Visa Commercial. It's just an extraordinarily exciting time for the company, and I'm just super proud of the investments that everybody's making across the place. So appreciate that question. Appreciate everybody's questions. Jennifer, back to you to close.
Yeah, and with that, we'd like to thank you for joining us today. If you have any additional questions, please feel.
Okay. Cool. No, I'm honestly, it was a little bit of a snooze fest through half of it, but some of the comments, like the Q&A was much more useful than the actual monologue at the beginning, where they're just talking about every single company and project that has been started in the last quarter. Don't care that much. Their comments about agentic commerce and stable coins were really interesting. I didn't realize how involved Visa is. They are not rolling over. They're not just, losing here. They're setting up MCP servers for agentic commerce. They see a bunch of new business lines end up getting started based on agentic commerce. Right now, they say it's just going to be used for discovery, but that entire new industries are going to be started based on this, that stable coins are going to lead to just massive growth in gig economy payments, micro payments, cross-border payments. They're working across 4 different protocols right now. They have some companies that are working with them that actually have charge cards that have stable coins as the payment rails, but flow through Visa. Honestly, I was pretty impressed. I think, you know what? There was a great comment, I think Investing for Freedom put in the chat earlier. One of the super investors had a famous quote, something like, "The longer you invest, the longer you realize you should own Visa or MasterCard." And boy, oh boy, that might be true. I mean, payments is a very interesting space, and they own it. It really is true. It's their world. We're just living in it. Big day tomorrow. Fed rate decision will be big news. Yeah. I should be live for that as well. tomorrow and the next day as well, we're going to have, well, which one's tomorrow? I honestly am not remembering. I think it's Google tomorrow, Meta, and Microsoft. We also have another show at 8:30 tonight. That's going to be really more my thoughts on the companies that we actually hold and how I'm changing my positions, all the news that we saw from FinTech, everything. Microsoft, Meta, Google, Mercado Libre, ServiceNow, Carvana, Transmedics, Starbucks, Chipotle, Coke, eBay, Teladoc. It's a huge day tomorrow. Huge. So if you're interested in that sort of coverage, let me know by subscribing, coming back to the show. But until next time, I'll see you guys at 8:30. Bye for now.